Godavari Power and Ispat Limited. Godavari Power and Ispat Limited, GPIL, is mainly engaged in the business of mining of iron ore and manufacturing of iron ore pellets, sponge iron, steel billets, wire rods, HB wire, ferroalloys, and galvanized fabricated products. Captive iron ore mines and manufacturing plants are strategically located in Chhattisgarh. The stock has delivered positive returns of nearly 69% in 1 year, as well as around 10% returns in the last 6 months. So far in 2024, the shares of Godavari Power have given positive returns of about 50.7%. Global iron ore prices have experienced fluctuations, initially dropping below $90, rising to $115 driven by China's stimulus measures, and now settling back below $100. In the domestic market, iron ore prices remain supported by auction prices and reduced supply from merchants. Steel demand in India is expected to grow robustly, with an 8% increase projected for FY24 and a 5% rise anticipated in the calendar year 2025. In November, GPIL entered into a definitive agreement to acquire up to 51% stake in Jammu Pigments Limited, JPL, at a post-money valuation of Rs 500 crores. With this acquisition of the recycling business, the company entered the non-ferrous segment. GPIL completed the acquisition of a 49% stake in JPL on a fully diluted basis, and the balance is to be acquired in compliance with certain conditions. JPL is a non-ferrous metals recycling company that has plants spread across Kathua, J&K, and Kota, Rajasthan. CAPEX plans and solar power initiatives. The company has outlined an ambitious CAPEX plan to nearly double its iron ore mining and pellet production capacities, alongside developing an integrated steel plant with 4x its current capacity. Approval for increasing iron ore mining capacity from 2.35 million tons to 6 MNT has been delayed and is now expected by Q4 FY25. By FY25, the company expects to increase its production capabilities significantly, with plans to increase iron ore pellet capacity to 2.44 MNT, sponge iron capacity to 0.594 MNT, steel billets capacity to 0.5 MNT, ferroalloys capacity to 80,000 tons, and rolled products capacity to 0.3 to 5 MNT. Further, the project to expand pellet capacity from 2.7 MNT to 4.7 MNT is going on as per schedule and is expected to be commissioned by Q1 FY26 with a total estimated project cost of Rs 600 crores. On the solar power front, the company has commissioned a 165 megawatt solar power plant, which is now operational. Additionally, land acquisition is underway for a proposed 70 megawatt solar power plant to support the additional capacity of the 2 MNT pellet plant. This project is expected to be completed by Q2 FY26 with an estimated total CAPEX of Rs 250 crores. Management outlook. The company's captive iron ore mines, with reserves of 165 MNT and a mine life exceeding 35 years, currently have a capacity of 3.05 MNT, which is expected to increase to 6.7 MNT by FY25. GPIL is expected to more than double the capacities across key segments, with iron ore mining reaching 6.7 MNT, pellet production expanding to 4.7 MNT, and the integrated steel plant growing to 2.5 MNT. Annual maintenance shutdown of pellet plants impacted production and margins. Operationally, the annual maintenance shutdown of pellet plants and heavy rains have impacted production and margins. However, management remains optimistic about recovering iron ore mining and pellet production in the second half of FY25. A strong cash flow position and strategic CAPEX plans provide a solid foundation for future growth. Additionally, the company anticipates improved margins and operational efficiencies driven by its solar power initiatives. Financials. Godavari Power reported a marginal decline in revenue from operations, experiencing a year-on-year fall of nearly 2% from 1,291 crores rupees in Q2 FY24 to 1,268 crores rupees in Q2 FY25. Similarly, its net profit decreased during the same period from 257 crores rupees to 159 crores rupees, representing a decline of nearly 38% year-over-year. The fall in revenue and profitability was due to lower production volumes of iron ore pellets and a fall in sales realization of finished products like sponge iron, billets, etc., despite higher volumes of finished products. The profitability was also impacted by an increase in other operating costs for maintenance of the pellet plant. EBITDA for Q2 FY25 decreased by about 32% year-over-year to 247 crores rupees, down from 361 crores rupees in Q2 FY24, while the EBITDA margins fell to 19% from 28% over the same period. Key financial ratios. Regarding key financial metrics, Godavari Power currently has a return on equity (ROE) of 21.9% and a return on capital employed (ROCE) of 29.2%. Additionally, the stock has a P/E ratio of 17.4 compared to the industry's P/E ratio of 20.8, while the company's debt-to-equity ratio stands at 0.01. Shareholding pattern. As per the September 2024 shareholding pattern, the promoters hold a 63.49% stake in the company. Foreign institutional investors, FII, hold a 7.39% stake, while retail investors and domestic institutional investors, DII, hold a 27.54% and 1.56% stake in Godavari Power, respectively.